Good morning, everybody. How you guys doing? Refreshed. Papa Tortellini. That's okay. Happy Sunday. Yeah. How you guys doing? Alive. That's pretty good. Isn't it second Easter or something? Wait, there's more than one Easter? Chillin' making tacos. Cold? It's snowing outside. Ew. What's up, everyone? Hey, Jen. Orthodox Easter? Oh yeah. It's gotta be different than the other one, because reasons. 904, 1094. Like that. It would be hilarious if Girk went the entire stream. I could do that. Did you explain the GME run already? Yeah, I think so. Please tell the cat I said psst, psst, psst. Thank you. I'll let him know. That shouldn't be an issue. Nice already dodged saying it. Well done. The stock that shall not be named. No, we'll cover it. I mean, it's really nothing impressive. But there's some interesting stuff with the IV and the way it ran that was a little different than some prior runs. But we can dig into those in a minute. Hold on. Give me one sec. No, that wasn't RC. Unfortunately. It also wasn't for me, which is at least 20% of the knocks up my front door. Any hopes for underwater GMECCs for a pullback? Give it a minute. Let everyone trickle in, and then we'll cover it. Because I don't want to. Here's what I don't want to do. I don't want to talk about it twice. If you have CCs and you're underwater, just roll up and out. Why not just out? Historically, just rolling out has been more than sufficient. Generally, up's not a requirement. Usually you can hedge off the difference with like in the money puts once IV starts to crush. You just have to be, you have to time them well. Because if you let IV crush too much, the price will be down too far for the puts to make a difference. I was ready to short it at 15. I'm glad I didn't. Yeah, that wouldn't have been smart. Never had Lex with puts on GME. It doesn't seem profitable. You have to, it's usually not. You have to do it in a really specific way to make profit on them, and it's expensive. That's the worst part, is you need to buy like deep in the money puts with shitloads of delta, um and usually a good amount of theta on them, where they're out beyond the IV spike. So you'd be buying like 25 puts for, like September or October or something like that. And then as the price drops, you just it's kind of just like shorting the underlying basically, which could arguably be better, but the leverage is far more expensive and the risk is greater shorting the shares versus the option. I'm still not sure is when is the best time to enter, given you have May and 2026. Yeah, well, the May ones are just for the ETF FTDs. I'll talk about GoEV a little bit, although I think everything's pretty sufficiently covered in the video. And then the leaps are to capture anything that could happen in the longer term, because if shorts are in fact buried under a mountain of positions that they cannot effectively clear, um, it could take a very long time for them to squeeze out. They tend to resist being squeezed as much as possible, which is what we saw in Upstart, right? Upstart took, from the time we identified that shorts were fucked, and deeply underwater, um, with insufficient liquidity to clear, it took 6 more months for it to squeeze out. So the leaps are for that. The May 17s that I have, which aren't really excessive or anything, are just in case the ETF FTD period is a sufficient catalyst to drive price improvement. There could be several medium runs or one very large one. It really just depends on how underwater they are, which you can't actually discern, right? Like, the data that we have tells us that they have overshorted to a degree that the clearing of those shorts generates more FTDs than are being cleared, right? So the process of clearing the short sale and clearing the FTD out is generating FTDs in excess of the rate of clearing, and so the ratio um, creates more FTDs than it does solves them, right? So it's like 1 to like 1.3. So for every FTD you clear, you create another like 1.2, 1.3 fails, and that's what keeps it on reg show for so long, because it can never get enough clears to get off, and to get enough liquidity to clear out those FTDs, you need to run in the underlying, right? You need to either shunt that those FTDs off onto the market maker, or you need to create enough volume that you can use CNS to net them out. Highest strike on GoEV calls is 8C for November. Is there a specific price range you were looking for with the May calls? Seeing if the chain gets extended up for the leap calls. I have sevens. I don't have November's aren't even leaps, but I have $7 calls for 2026. No, I mean the chain would probably get extended if we breached like $4. We're pretty low right now. I don't think it'd take a very big move to push the chain up, or at least on some of the monthly and weekly contracts it'll extend up. All right, let's cut the bullshit. Calls or puts, Pickle Man. I'm gonna be probably pretty bullish for the next week and 2 days. So it's not completely clear, but it's better to have double exposure near and far. Historically, on these plays, it would benefit to have both. The near is obviously way more risky. It may not run with ETF FTDs. Those may just die, but they're not very expensive, right? And then the far dated ones are there for IV, right? If IV spikes, those are going to go up massively because they have a lot of Vega, especially if price runs up to $4 or $5. And it gives you plenty of time. Also, the cost to carry is extremely low. So if price doesn't change for 6 months, 7 months, it gets off reg show, it doesn't look like anything's going to happen. Your drawdowns, 20-30% versus if you got, like November calls where the drawdown could be 55, 70, 80%, November through Jan, for instance. Like, I think the Jan 2025s, if you get out like 6 months, lose about 80% of their value. If nothing happens, right? Just decay. So it's clear, but it's also that I want to have a low cost to carry. Also, the Lambo SUV is disgusting looking, even for a Lambo. The fact that Lambo makes an SUV is disgusting. I'm doing alright, STD slot machine. How are you? So, GME is a little weird this time. We'll start with that. So back the last 2 Fridays, because I got in an argument with someone on Reddit, I reviewed the member streams to just check what I said. There was a potential it could run, but it didn't look very good, right? Reg show, XRT was not on reg show, and the options chain was pretty dead, and that was, let's see, 2 Fridays ago would have been like the 26th. So it was like here, and then last Friday. And then at the end of last week, short vol on the put side picked up. So short puts started expanding pretty rapidly. That gave like a 12.50 price target for any kind of run if it got a continuation. This week, shitloads of 0 DTE calls came in. Like 0 DTE, 1 DTE, 3 DTE, starting on Wednesday. Delta on GME expanded pretty rapidly. Usually, we don't see the calls so short dated. When these runs happen, usually they start to build out further. It's not as immediate, but I think that's because XRT isn't on reg show and there's simply less volume to clear. Um, and so I do think it hit the end of its run on Friday. It rejected exactly off of the point at which Charm would have turned positive, which hasn't happened on GME in almost 2 years. Gamma Max, however, was skewed heavily because of all of the zero DTE call buying. A shitload of it was at like $12 and $15, and this drove Gamma Max down to spot. And so, Friday I mentioned that Gamma Max was probably closer to 15, which gave us an upside price target of like 1720 to 1780. And I said this when we crossed like $14. It did ultimately get rejected at 1745. Started selling off pretty hard, and now Delta on GME, or total dealer Delta, has fallen to negative 420, or negative 42 million. And then total delta expanded quite a bit. So the adjusted delta fell to negative 42 million. Total delta expanded to $500 million. Gamma is still slightly positive, which means it could have a little bit more upside, but that upside's probably going to be capped. Also, bot call delta fell off by a little more than 100%. So all of the zero GTE is closing, very few of them exercised. Probably means that going into Monday, it could fall a little harder. I do think that the run was big enough that it should get some T plus 2 action, but it may not be uh, all that good. Now, if markets like the indexes continue to trend up, that could, support the price for some time before short vol moves in and brings it back down, right? Short vol's not going to come in and attack the price if indexes are moving up very rapidly. So it may be a while before we see short vol come in, but when it does, they'll push it back down. So it may stay stuck between like 15, 17 with a couple spikes, maybe T plus 2, T plus 5 over the next week. After Tuesday T plus 2. So historically, if it does run again on T plus 2, it'll either get a similar high or a slightly higher high. I will say that back in December when I sold, it got a T plus 2 run, but it didn't occur till Wednesday. And then it got another run out on T plus 6 that extended out and up as indexes trended like another dollar or two. And then it got started to get crushed after that. Once indexes had like a little bit of a correction, short vol moved in and they shorted the fuck out of everything again. MM's just gonna slam the sell and prevent the need to hedge. Yeah, pretty much. They'll probably start selling calls at like 17, 18, 20. I think Friday they were already selling calls. Goddamn. Hold on. So it got shorted harder at earnings. Yeah. Which, was unusual for them not to let any liquidity come in post earnings. Usually they do. And so there was maybe a little extra oomph packed into the run because of that, but I don't think it was excessive or anything. I mean, earnings were not good. So they didn't have to short them that hard. A lot of people just sold at earnings. Yeah, it looks like they were selling calls out at like 20, 25, 30 already. Um, there's still a little bit of call interest at 17, 18. If we lose 15, we'll probably fall back down to wherever delta neutral ends up once the IV cools off. I think IV hit its near its highest level. Let's see. End of day Friday. Yeah, Ivy hit Ivy 30 hit 237, which is the highest it's been in the last year, by about 100%. Also, call skews quite high, but like I said, lots of that was zero DTEs, so it's probably going to fall off. Any GME price prediction for June? Would probably back down again by then. So weekly SPX calls could be good next week or so. I can't manage stuff very actively this week. Probably not much zero DTE playing for me. I mean, I don't know if I'd buy just straight weekly calls, but maybe I would get some kind of debit spread. Um, our 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 like trading on Friday was kind of toppy. We could end up trading pretty flat as realized vol crushes out before larger positions can build to the upside. We could also end up in a situation where we just fail this level. I don't think bulls are very strong here, and they had to put a lot of effort in just to keep the price above GN into Friday's close, and we're still like way below GN on the monthly. But I'll get into that a little bit later. Jamie from Trade Size are talking about the options chain on GME a lot. It literally gives zero fucks. So my infinity pool is only 1610. Win actual infinity. Where does Pickle Jar stand on the Kendrick v. Drake beef? I mean, generally speaking, I think Drake's kind of like a piece of shit, right? I don't know that much about Kendrick Lamar. Uh, but I guess Kendrick. I've never liked Drake, not even on Degrassi. Is GoEV ever gonna run? Maybe. That'd be cool. He's not. No, hold on. That's inaccurate. Drake is not handicapped. He pretended to be handicapped for a television show. Drake was a Disney kid, so he's got no street cred. He's also Canadian, so he's not even real. That's correct, Bob. We are still in a bear flag. You're not wrong. We do not have a reversal yet, but we're closer to one than we were. It's a little easier to see on ES. We did break to the upside of the consolidation on Friday. But yeah, we still got a little bit of a bear flag, maybe a sideways thing going on. Kendrick grew up in Compton. See, that's a real place. We're sorry for Drake and we're sorry for pineapple on pizza. Only one of those things can be forgiven. And smooth. Stand united on hating Drake. Mm. I feel like pretend pop rappers shouldn't beef with real rappers. A, the potential for them to get shot as a like a probability percentage skyrockets. Like Drake is now 10,000% more likely to get shot outside of a club, which was never a risk for him before. Secondly, only one of the participants can rap. This is like when Machine Gun Kelly went after Eminem. He should wear body armor like 50. Yeah, he should. That way we can laugh harder. Yeah, but like Drake's got a chongus. That's just because you're seeing it held in children's hands. I mean, his hands are small. Pickle Jar needs to start its own rap beef. Does ES and SPX have differing technical setups at times? And if so, how do you weigh their importance? ES is always more important. Like if SPX looks kind of neutral and ES looks bullish or bearish, ES is right. I think Beyond's about to have another run. It's already running. I think you're making an argument for Drake to continue hanging out with real street rappers. Girk, look into the TLT. Do you see it? I don't want to look at TLT. I will say that the 20 years I bought are up, and I want to sell them again. Yeah, that's not up much. It's like a little bounce. Here's the facts. Poopy pants. There's really nowhere for the 20-year to go, but down more. Well, or yields up. Regardless of Fed policy, regardless of the Treasury, there's nothing they can do to stop the forward progress of the 20-year yield. I just wanted to drop in before work to say you're awesome. Thanks, Stash. That's nice. Pickle Jar versus Super Stunk? Again, that's like beefing with a Canadian rapper. Embarrassing. How's your weekend been? Mostly uneventful. I went down to my house yesterday and checked out some of the work being done. It's nice. They've got an extremely smooth finish on the pool concrete, but it's still curing. It's very smooth, like a skate park. Am I doing anything to the interior? Yes, I'm gonna rip out all the shag carpets because they're disgusting. I mean, I'm not going to physically do that, but I'm going to pay someone to do that. No more shrimp? No. We're still going to have shrimp, but we need to get the dirt out of the water first. Right? So we had to repair the pool. Then we can put the shrimp in, and then we're going to cook the shrimp in the hot tub. We already went over this. Room for us all? Absolutely not. Tesla looking good for a run next week. To Pickles picks targets. Yeah, let's finish up the meme. So we went over GME. It does look like it got rejected pretty hard at the 1745 mark, which would also have been the point, the exact penny at which Charm would have turned neutral. So the MM basically said fuck that and dumped the delta before that happened. That dump may continue in pre-market, may continue into Monday morning. If it doesn't, there's a possibility that it runs to a slightly higher high going into Tuesday. Um, and that'll be T plus two, Tuesday, Wednesday. And then after the second high, probably not a lot of price action on it following that. Upstart broke out above trend just a tiny bit, but not the near term trend yet. So that one's still got. And no, broke out above that too. So yeah, actually broke out above both. Testing the $25 range. If that continues to see covering this week, especially with easing financial conditions, which tend to benefit upstart runs, I think it could hit like 27.50 to 30 again, similar to the prior couple spikes that we got over the last few months. It's definitely very illiquid. Nvidia's probably going to keep running. That should benefit it pretty greatly. I think there's plenty of options interest for it to squeeze out, at least at the 25 and 27.50 strikes. So that one looks pretty good. Fubo got shorted on earnings, back into that kind of pre-earnings range where we were seeing plenty of buy-ins. I think revenues were good. EPS was better than expected. They continue to beat quarter over quarter. That's just going to mean more buyers at the bottom. I know there's still some worries about the lawsuit, but we'll see. But it may bounce back up above 150 over the next couple of days. The pre-earnings run opened up a little bit of liquidity, but it's still not that much. So I would say that it's possible that it moves back to the prior high. Generally, when you get bullish news and you see something get shorted super hard, it's in preparation for short covering. So Pontiff pickle pool parties, maybe. Do you think Fubo has some dilution on the table this year? They said they have plenty of capital um, right now through 2025. So I don't think they're going to dilute anymore, but they do have an open shelf, so they could if they needed to. I doubt they would at these prices. Top started running a bit on Friday also, and we're seeing a lot of the memes kind of squeeze off right now after the bounce. And seeing mid and small caps squeeze off after a bounce like this is either extraordinarily bullish or really bearish. I'm still not sure yet. I guess we'll see what the market does, but it's a bit odd that after such a small bounce, the short caps are like the small and mid cap shorts are squeezing off. Pretty strange. Usually you see this kind of activity when a run is like peaking or very very strong. Yeah, it might be recalls. It's a possibility. Definitely something to watch out for, though. Anyway, yeah, top up about 17% on Friday. This hasn't run in quite some time, and it started off from a pretty illiquid point Friday morning. So I would say that it's got some range on it. We'll see how much volume it gets, but what does TUP have going for it? Well, it's not out of business yet, and that's maybe all that matters. Is it survived long enough that the shorts need to do something about their positioning? It seems like memes popped very early compared to past bull runs. Yeah, it does, and we're not even on like a bull run yet, right? That's what's strange about it, and that's why I'm kind of cautious about the upside in the indexes, because this is more akin to share recall behavior than it is to like shorts getting forced out of mid caps or small caps, right? Because Russell's been underperforming, um, like way under the like NQ. Um, and then additionally, we're still like 2%, 2.5% from the prior high. So none of the shorts that piled in prior to the drop should really be in a bad position right now. So either shorts expect this to run really hard and they want to cover early, or um, the shares are being recalled, which is both are a possibility still. Beyond now up 27% from its low test prior to getting on reg show. um, I don't see any reason for this not to continue. It bounced up above the 750 and $8 sold call levels. um, gamma max Gamma max is now at 1530. Gamma max, gamma neutral, and delta neutral are all contracting towards spot. So we're getting an increase in bot calls or bot to close calls, and that's dragging the neutrals closer to spot, which means that the hedge flip is sooner. Um, that's pretty bullish. IV helps that out too. I think it's probably going to just keep running here, at least until it's off of reg show, which, as of Friday, let me double check that. It is still on reg show. I believe 6 days now. The reason I chose this instead of this and Upstart instead of going over and like getting in on GME, was GME was risky because XRT wasn't on reg show, and notionally this and Upstart have far better ranges than GME had the potential to have. So even if GME had topped out around 15 where we thought GM was, like the GM plus 15%, which would have been about 14.99. Except GM moved up a bunch on Friday to like 15, which gave us a top end range in like the 17s. It still only had like $6 of potential range, whereas even though Beyond rarely tests gamma max on these runs, um the range from where it was to gamma neutral at the time was more. And the range for even the range from here to gamma max is still another 100%. So potentially this could run far further. And Upstart, that's also true, especially if their earnings are moderately decent. Like Upstart could run to like 30 or 40, which is significantly more important than the percentage increase when you're trading options. Go EV, I mean, it's still illiquid. It's still being shorted. They're still netting off those shorts, and it hasn't done anything spectacular for 6 days, despite you guys asking me about it every single one of those days. It's basically just traded in a flat fucking line to the right. Um, we're waiting to see if the larger move up in ETF FTDs Monday and Tuesday of this coming week have any effect on it. If it doesn't, I'll probably close out the like the May 17 calls and then just add some more leaps to it and just see where it goes. I'll stay long as it's on reg show. Still got your Zom CCs out, you know it. Doesn't seem to be anything I have to worry about. I don't know if you know this, but um, tensions in the Middle East have clearly been solved for the first time in 3,000 years. So we don't need to worry about it anymore. Everything's going to be fine, Lawrence. All right. Anything else we need to talk about for those? No. Is TUPS Gamma Max relevant? Absolutely not. The price is too low. Which may be an effect that we saw in GME also, is the price was so low that Gamma Max is just wrong. So when like vol picked up, it skewed the neutrals because there weren't enough strikes on the chain for the to have like a true neutral. NQ deep dive. I don't know about that. Let's get into the Mag 7 because this is the shit that pays the bills. All right. So Apple got a bit bullish after earnings last week. I think everyone's well aware of this. Um, Delta's been picking up on it. Continued to move up a little bit on Friday. It was a decent like 0 DTE target. I think it sold off pretty hard into close. That was probably a lot of the end of the week options bought during earnings, just taking profits. Charm's a bit positive going into the expiration. Some of that's going to fall off. Some of the delta is going to fall off. It's probably well supported. I think I'm going to switch now from selling calls on it to selling puts about 7 to 14 days out. I'll probably target the range below 180. I think for now, but if we can get closer to 180, I would prefer to sell them there. It looks like I'd be selling puts right alongside hedge funds that have sold an additional 30 million in Vega exposure over the last 2 days. Um, yeah, so I'm just gonna flip flop the theta on that one and just keep harvesting free money off of the Apple chain. Um, well, hopefully free money, unless they say something bad like we don't like AI or who knows. But I think Apple's gonna be it's flipped to the side of the chain where it's gonna grind up versus grind down. Um, it's always fun to sell theta on Apple, but it's never fun to be long or short it. Um, do you think Buffett dumping a bunch of his Apple shares will have any impact? That's kind of old, isn't it? I think their buyback was fucking stupid. I think Fubo, or I think Buffett's made that mistake in the past, right? He keeps dumping. When did he sell more? Like, was this recent? Looks like they reduced their stake by 18%. Yeah, but this was probably prior to earnings, right? This was during this time period at some point. You guys, like, 13Fs aren't like, oh, they did it yesterday, right? It just means they did it sometime in the last quarter that's undisclosed. Yeah, I'm sure he sold long before the share buyback of the earnings. Now, the real question is he going to sell more? Because the buyback is stupid and they're buying it back at way too high of a price. Apple said iPhone sales dropped 19%. Meanwhile, Foxconn reported a 19% increase in production of iPhones. Sounds like they're going to bloat their inventories. It was prior to the last dump into the 160s. Yeah, that makes more sense. Can you explain what a buyback is? A company makes an agreement with its shareholders to use excess cash reserves to buy back shares from the market, thus reducing the float and increasing the value of each share broadly by the amount of the buyback divided by the number of remaining shares. Is the How Leaps Pickle play dead? No, I've just been buying more. How's Hal doing? I know it's down with oil being down, but I don't really care about that. Yeah, it's fine. I'll probably average down when it gets back to trend. This is like a 5-year play. You're gonna need a lot of patience. This isn't like a quick thing. This is like DCAing leaps for a ramp up in production when our our estimates for supply into the end of the year don't meet what they should, right? So I assume that oil is still going to stay pretty stable. I still think 78 to like 85 is its stable range, and then OPEC is projecting that into the end of the year we're going to be running a deficit in oil reserves. And if that's the case, how we'll see a lot of improvement as oil operations are expanded both to capture higher oil prices and to take advantage of government subsidies to expand oil operations. I don't know. I wouldn't buy shares up here, but I have a pretty low cost basis. It could be okay. I'm just sticking to like the 25 leaps. Anyway, back to the Mag 7, or well, the Mag 7 and then the baby mags. AMD still kind of looks like shit on the chain, although it did bounce above Delta neutral last week. That should give it a little bit of upside range. It doesn't get bullish until it breaks above 158. right now, but bot calls are increasing. Gamma's turned positive. Delta's not quite yet positive. Short calls or short puts picked up over the last 2 days, and Charm was negative into the back half of the week. So that should give it a little boost on Monday as the hedges off that negative Charm from Friday. And then that might be just enough to push Delta, like the adjusted Delta positive, because that's not really that far off. One negative 1.133 billion. So it's got a little bit of upside potential, but it might stall out around like 65 ish. It doesn't look like there's a lot of long call interest beyond that point. Now, if Nvidia and like semis start running really hard again, that could change. The Tech 10, yeah, maybe. It doesn't have quite the ring to it. I'm still long Amazon from Pickles Picks last week. I don't see any reason to close my position. It looks like it's gonna continue to improve. Delta is still like skewed. Delta is still not above positive yet, but Gamma is still substantially positive. Bot calls are picking back up again. It looks like it's just consolidating for another bullish move up. It's back in its like longer term uptrend, so it's got almost a full reversal. The next place I'm looking for a breakout is at like 190. We're not too far off of that. There's quite a lot of short calls at that price, so it may take longer than a week for it to break out. If it does, I'll probably just close my longs and wait for a better setup. But right now, it looks like it could keep grinding up a bit. Google's got hit with some nasty antitrust news Friday morning, and almost shook me out of my long position on it. Thankfully, I just added a little bit at the bottom and stayed in it, and it recovered almost completely. The call chain here still very bullish, lots of delta. Gamma's extremely positive. There are not as many short puts as that I would like to see, but there's an okay number of them. Um, if we start seeing those grow, it may be a little bit more bullish. Um, but yeah, it looks very stable, and it's not clearing that downside gap. So I think the mid price target is still uh pretty much in line. There's sold calls at 70, 75, and 80. All of which could get squeezed out in like an index up, especially like NQ up scenario. So if we get another big run this week, and we don't have a lot of substantial news, so if we get another big run in indices, this should probably do really well, squeezing out those sold call positions. Meta still recovering. Not the best reversal on this, but it's let me see something. Not too bad. Still a bit short of positive delta, but gamma's positive. Short puts have been picking up a bit, but some came off into the back half of the week. This gets a lot more bullish on a breakout of 447, which it looks like it cleared. Is that in after hours? It did move up just into the end of the day. So it closed just above that. Bot call delta picked back up to positive. Charms flat. Gamma's like 303 million. Yeah, this looks pretty bullish too. I would say that the risk is it falls back below 448. It's like right there. But it looks good to the upside. I'm not sure the range. I could check that though. Because Gamma Max is super far out of the money. Um, Yeah, Gamma Max is at like 506, which it's really not close to right now. How long does share recalls last if that's the situation? A couple days. Like T+2, generally. Mm, yeah, Meta's got a pretty good ramp. Cleared a big pile of sold calls at 450, but they haven't squeezed off yet. And it looks like there's a decent amount of bot calls from spot all the way up to about 465. Then it starts to get a little shaky between 465 and 480. So I would say like a weekly PT of 465 on this doesn't seem out of line with the current positioning. Looks pretty good. Microsoft, is that just fact? Hold on. No. That was weird. 407.19. Still negative delta. So a lot of these still have negative delta, which means they haven't fully flipped to bullish on their options chains yet. But Microsoft looks well supported. Charm is positive. There's a small number of calls that have been coming in. I would say a mean reversion back to like 413 or even back up to 426 is possible over the next couple of weeks. And that seems to be mostly supported by the options chain. Lots of sold calls at 410 are the current problem. And then there's a decent number of calls all the way up to like 435 after that. If it can get above 410, which could act as a very strong resistance, then it could keep running. I would say if it's rejected there, that might be an opportunity to sell some calls to the upside of that. But it could break out. Did we go over Upstart? Yeah, at the beginning of the stream. Netflix has been recovering pretty quickly. This is starting to get into a range where it might start to move a little bit faster to the upside. I think, yeah, if I'm not mistaken, it just broke out above gamma neutral. It's not so fucked up. Is that the right day? That's weird. Yeah, it just broke out above gamma neutral. So this also looks pretty bullish. Delta here positive, as is gamma. Charm positive in the back half of last week, and call interest has been rising. The range on that, probably not that great, but maybe a little bit better than like Microsoft was. Gapped up too. Why is that not log? Hmm. Mm. 624. Let's see. Looks like it's got a decent ramp up to 590, and 600. There's a shitload of resistance. So it's got about $10 to $20 of upside range. And it's going to run into a lot of short calls at 600. If it breaks 600, though, the short calls could squeeze off and it might get a new high. Um, so there's a couple ways to play that. But there is about $20 of upside room. So I'm not long Nvidia anymore. From last week, I took profits on Friday because it didn't break 890. I did not like that. There's still a significant amount of resistance on Nvidia at 880, 890, 900. And it's been having a surprising amount of struggle getting up through that like 70, 80 level. And we even closed below 890 on Friday. Um, fuck. I think. There we go. It should be supported here. We're definitely well above gamma neutral. Charm is positive. Delta's positive. The biggest issue is that short puts on Nvidia have been pulling back the last couple of days. And that may just be that, short puts are repositioning higher and getting ready for another leg up. Um, this is probably still very bullish, but could be choppy in the current range. Like between 880 and 900, there's not a lot of like gamma's pretty flat, and so we can kind of slide up and down. If it breaks 900, however, it'll probably go to like gamma max, which is pretty far out of the money still, I think. Yeah, gamma max is around 950. So uh it looks good, but it'd look a lot better if it broke 900. And there's a lot of risk entering at the current price because of all the resistance. So like if you enter at 886, it could easily drop back to 880 very quickly. If it loses 880, it could drop back pretty far. I think a loss of 880 could see it slide all the way back to 850 before it gets support again. So a little bit of risk to the downside, and it's a little wide. I would say that on a confirmation of a break of 900, that's a much better entry. And then lastly, Tesla, which has just been so shitty, just creeping along right at 180, where it's set up well to break out, but it hasn't. A lot of sold calls to the upside here are pretty suppressive, but it is above gamma and delta neutral. However, those have been getting quite close to at the money, with gamma neutral now at 177. The downside move from here presents quite a lot of risk. Gamma fell off into the back half of last week, and Charm was still just negative, and calls have been falling off for like the last 3 days. So maybe the bulls are kind of getting exhausted or giving up here. And if that's the case, and we fail 177, this could turn very bearish very quickly. A loss of like 177 and a fall below 165 could see it dump like all the way back towards like the one like the one like the 130 135 level. So a lot of danger going long here. But if it does get the breakout, it could keep going up. It needs to clear 183 still. That's kind of the line in the sand. If it can get above 183, it should have enough support to squeeze out. Where is it? It's like right there. Squeeze out those 85, 90 calls and move up. Biggest resistance to the upside is probably here at spot, but there's a little bit of resistance at 85 as well. There are puts at 75 and 70 though, so a drop to the downside could see a pretty quick move to 60, and then that can continue. Definitely in a risky spot. It may be worth a straddle or a strangle, and just see where the options market takes it, but that could be expensive. Kind of up to you guys. All right, I think that's it. Let me see what the quants are doing, and we can get this show on the road. What's up, nerds?
I put it in my butt.
Oh, god damn it.
And when I did, they went ahead and let me know that that wasn't necessary, but it was helpful for the procedure. But it turned out it was okay. It was just hemorrhoids, like they thought. The thing in the butt really sort of exposed the hemorrhoid. So yeah, it was a good doctor visit. Maybe next time I won't go to the dentist for this sort of procedure, but yeah, overall it was a good thing.
Gross.
Hey, Girk.
What's up?
I put the thing in the boardroom, the chat.
Oh, okay, yeah, okay. So is there a link for that? I'd love to poke around that. Or is it basically saying what you're saying?
I typed in CBOE SPX options.
All right.
Basically, what I said is correct.
Okay, so okay, got it. So anything that's all right. Yeah, I'll put in that exception that our numbers might change a little bit, but I mean, like, really, it should only really affect one DTE more than anything else.
Sure.
What's up, guys? How you doing?
Yeah.
Oh, I'm still muted. There we go. How you guys doing?
Pretty good. How are you?
Doing all right. I heard about Dork's dental proctology visit. I'm sorry to hear that, man. You should just rinse with witch hazel. That should solve your problems.
Like a witch hazel enema?
Yeah, like a mouthwash, but on the other side. At least that's what my dentist recommended for you.
Okay, yeah, for sure. No, my dentist told me to get a water as of today.
I don't want to hear about your dental anus issues.
Well, that's not fair.
I know,
what about your anal issues? Do you have any to speak on this week?
Huh?
Do you have any to speak on this week?
No, I keep that shit to myself. Literally.
Oh, okay.
I took a poop the other day and it was a perfect 3 on the Bristol scale. I was so happy. That's a nice poop.
Nice, dude.
Yeah.
Well done. Getting the right balance of soluble and insoluble fiber.
Oh yeah, it was fantastic. It's definitely, being regular is such a boon to your mental and physical well-being.
So how are you guys this weekend?
So far, so good. Just hanging out.
I thought we could try something, and this is gonna sound crazy, so brace yourselves. What if we just immediately address the things in the market that we need to talk about, make our predictions for the week, and then end the stream before 5 p.m.?
I don't hate that idea. I actually kind of like it.
All right. So let's get into it. We had some big stuff this week. I think we have a lot to pack in, figuratively and literally, Dork.
Ooh,
Um,
ooh.
Sorry.
it'll. Oh God, that sounds wonderful. It'll never happen. That's accurate.
You want
It's
to
a
talk
good
about the tree that
metaphor.
blew over in my front yard last night?
What's that?
We could talk about the tree that blew over in my front yard last night.
Oh shit. How are you gonna? Are you gonna replace it?
I don't know. We're
Did
still
it?
just chopping it,
Did it fall?
scavenging it.
Is it like big? Like a big
Yeah,
tree?
it was like 10 inches in diameter and like 30 feet tallish, 40 feet tall, maybe.
It didn't hit your house, did it?
No,
Ah,
it
that's
fell
good.
right next to my wife's beat up car
Wow.
that I wouldn't have minded to just have totaled out with insurance, but
Mm.
it lived to fight another day. To completely unscratched. It like some of the ends of the branches just barely rested down onto the back of the car, and just gently touched it.
I'm sorry to hear that. You could have gotten a new car out of the deal. Now
I
you've just
know.
got
Well,
firewood.
yeah, I know that I have to cut them myself, which sucks.
Yeah.
Although
It
my,
just
my wife did most of the chainsawing to get it into the chopping size. But before she finished, she accidentally chainsawed through the power cord. So that's where we're at right now.
oh, I might know somebody who has or sells tiny battery operated chainsaws. And I think they're designed. You could just give them to the kids and let the kids do all the work.
Yeah, yeah. You'll have to play that YouTube ad later.
Yeah.
Kids with chainsaws. That's a great way to describe everything right now.
Somebody did.
Yeah.
Thank you, anonymous person who didn't leave a message with their donation.
Gotta love that. So can we go over last week's economic data?
We could, yeah. That's what I thought we'd talk about.
I would love to talk about that.
Do you want to talk about, like, do we want to just jump right into NFP or the Fed doing nothing?
Uh, I mean, we can jump wherever you want to jump. I mean, really, I don't know necessarily what I want to go over. It's just all of the data was just so interesting, was it not?
I mean,
Like,
we have a lot of data that's pointing at stagflation right now. And I want to
yeah.
I want to say stagflation a bunch because there's this guy Treetop who fancies himself an armchair economist, and he likes to argue that stagflation has a strict definition of rising unemployment, rising inflation, and no or negative growth. And I think we have all of those things. They are just obfuscated by huge amounts of deficit spending.
Wait, so PMI being at 49, like global manufacturing PMI being at 49, while the Case-Shiller home price index jumped, 0.9%, and the overall housing price index jumped 1.2%. That's not stagflation. We have
Apparently,
contracting manufacturing PMI and increasing housing prices. I mean, we can. There's
apparently not.
That's such bullshit. It's a cop out. Like,
Now, JFresh, let me ask you this: if we removed deficit spending from our nominal growth rate, what would we have?
A recession, if not a depression.
Thank you,
Yeah.
thank you. I just
well, to
wanted
take
more people to shit on
Question
his
I've been asking.
textbook definition of stagflation. I mean, this is
okay, so
something this is something more economists need to talk about, right? Is that we have a novel situation here that is not like previous situations. And the thing that most resembles what's happening is stagflation.
Yeah.
We could make
Well,
up a new term for it. We could call it dental proctology. I mean, whatever we want, really. But it's not good.
yeah, I think I see something that really obviously we've talked about this before because I want economics to be a science, but it can never be because then there would just be nothing to talk about that was scientifically rigorous.
Yeah.
Um, but yeah, like everybody's sort of trying to use their old correlations and their old ways of thinking about the data to convince themselves that inflation's that the soft landing can occur and is occurring. And nobody sees an issue with the fact that deficit spending is 7% of NGDP. How could you ever have, I mean, by definition, the money supply is growing by a minimum of 7%, unless banks stopped lending, but the banks aren't curbing back lending. And actually, on a year over year basis, broad money is actually positive again. Its growth rate is now positive.
Mm-hmm.
So, I mean, you have a situation where, absent any sort of massive gains in productivity, it's either inflation or depression or both, or well, recession or both. I don't want to say depression is guaranteed, but
Yeah. Name a
and honestly,
year. Oh, sorry.
it's not even going to be that, like, yeah, it's going to suck. It's going to become harder in general for most people to get positions and things, but there's also a lot of benefits that nobody really talks about for the average worker. Um, Prices go down,
Yeah.
wages tend to be sticky, right? So there's maybe higher unemployment, but the people who have jobs will be able to afford more relatively. And that's not
New.
necessarily right. We all want to work less. And so if you have that dynamic, that's actually really good for workers as a whole. Like if if you have a situation where you have two income earners and one of them now you find yourself that one person's wages can now afford you a lifestyle that you're comfortable with, and one of them can stay home, then we can maybe start having kids again. there, there
No.
there's there's not necessary it's not necessarily guaranteed that it's all bad if the rich get fucked, which
Yeah.
is what we're talking about when we talk about a depression or a recession. We're talking about the rich. We're not talking about the average person at all, because nobody's really measuring that.
No. I mean, technically, like the poorest people are in their day-to-day lives are most insulated from the effects of a large economic downturn because they already had nothing. So it's
Yeah, I
hard
mean,
hard to lose more of that.
they're the people working at gas stations and grocery stores and all the places that we're not going to stop going to.
Yeah.
They're what I call they're actually running the world, running and building the world. The people that are doing that, they don't stop doing that during a recession or depression. The people who stop working are the people who are doing all the bullshit jobs at a desk, pretending to be important and doing AI and having an AI strategy and managing something that they don't understand and provide no input into. Those are the people that
The
are
AI Scrum Master?
yeah.
Poor dude. How's he gonna afford his San Francisco condo?
Don't care.
Wow.
He's not
Yeah,
one of those
so
people
on
just
that
free
front,
freedom.
employment costs and wages are up dramatically, despite a brief pullback in quarter four that got everyone all bullish. And we're seeing that interestingly in new hire data. It's not like the people that are currently employed or have been employed for a couple of years are really making that much more money. Their raises seem to be mostly over, but in order to attract new talent, they are significantly having to bump up salaries across the board. And new hire and wage growth for quarter one is coming in around like 7.6% versus raises for current employees, which is around 0.3. um so
Yeah.
they're really fighting to get the talent in the market that they need, and they're paying a huge premium to attract that talent, at all businesses, and I think we just simply don't have the workforce.
Yeah,
Like
well, this I
that's
mean,
really the answer, is that there's not the workforce to support a weak labor market, and like the way we're
I mean,
looking at the labor market is wrong.
there is definitely an age cohort dynamic that's playing out here that we've talked a little bit about, but I think it's starting to become a little clearer.
Yeah.
There are a lot of old people that are retiring, right? It was accelerated during COVID, but it was also obfuscated by the effects of, everything that we did during COVID. But it's pretty clear that we're getting lopsided, right? So you have this old population that had most of the jobs and has most of the wealth, whether it's liquid or just on paper, and they are unwilling to let go of it, right? But
Mm.
they're slowly being forced to, as they still need to consume, but there's nobody to sustain that consumption for the prices that they want to pay. And so I think that this dynamic is going to continue for a long time as all of this older cohort starts to retire and accelerate that effect. And that will raise wages and drop the prices of assets, which is exactly what our generation needs.
Yep.
And so for most people under the age of 50 that do something that moderately is necessary for the functioning of the world and modern society, I see a downturn as being primarily a good thing, right? It's just the people who are leeches and clingerons and asset rich that are going to get wiped
How
out. And
dare you talk about me that way?
No, Girk, see, the thing is we're only talking about people who do not deliver a product.
Mm.
You deliver liquidity to the market when it is needed most, right? That is a very important job, okay? But we're talking about people who are like managers who all they do is get people into a room to talk about things and organize other meetings for the meetings that have meetings, right? It's those people. Yeah, I mean, there's some that are good. There's a lot that are shitty.
yeah, like the people at Google that are telling the search engineers to make search worse so they can put more ads in there to make more money.
Yeah, those kinds
Don't
of
understand
people
the
deserve to lose their
product,
money.
and they're destroying the product in the process and makes people not want to use them. But because they have a monopoly, they can get away with it for a long time. It's just rent seeking. It's
Mm.
rent seeking hidden underneath the auspices of mega capitalism that makes it look like, oh, it's a very efficient machine that's being well run. No, they're not. They're being run. You would be appalled at the waste.
Yeah,
And
people like to talk shit about the DMV, right, and how inefficient it is.
hey, you
But
know
these
what?
people have never worked at fucking Google.
I have actually never had a bad experience at the DMV that I could ascribe to the workers of the DMV. You know what the problem with the DMV is? People are too retarded to figure out what documents they need to bring before they get there. And then when they're told they don't have what they need, instead of just saying, "Okay, I will go home and get them," they have to sit there and argue for 10 minutes and beg and plead and go through the 7 steps of grief.
Here's how you fix that. DMV is not open between 9 and 5. DME is open between 5 and 9.
Like 5 a.m. to 9 a.m.,
No. 5 p.m. to 9
5
p.m.
p.m. Hmm.
Everybody would be way happier, and DMV workers would have to work half as much.
I don't hate it.
I don't hate it either.
Yeah, if you
There
didn't
might be
like the document issue wouldn't be a problem if you didn't have to take off work for the fucking day to show up there for them to slap you in the face with some bureaucratic red tape that was unclear on their website.
Well,
Right?
I will also say I've never shown up to the DMV without all of the documents that I need because I sit there and read the fucking instructions.
I just bring everything I have. Like I have a
I do too. Yeah, I
file.
bring it in a
But
suitcase.
see, you're part of the problem too. You just bring this big thing and be like, find what you need in here. I'll wait.
I pay their salaries.
It's both
Yeah.
of them, Jay Fresh. It's the gherkins of the world and it's the idiots of the world who don't bring anything and then beg for an hour that make your appointment, 2 hours late, right?
Yeah, but all of my experiences, once I get up to the counter at the DMV, it's just like, they know how the systems work inside and out. They're clicking all the buttons and menus and they're putting all the information in. And then they hand me all the papers back, and then they're just like, all right, stand here, we're gonna take a photo, and then boom, out comes a card. And like, it's the whole process once I get up to the desk is like 3 minutes.
You know what? I lived in Indiana briefly for about 6 months, and during my period there, my license expired, so I had to like change my license and re-register my car. And they don't have DMV, they have BMV. It's the Bureau of Motor Vehicles, and it is the most efficient and expedient system I've ever participated in, run by a government organization. You come in the door and there's like a little kiosk, and you select what you're there for, and within 3 minutes you're at the desk getting it done, and then you're just right back out. Then you're done. That's it. It took like to transfer my license and re-register my car took me like 14 minutes.
Yeah.
Damn, dude.
And that was
You know what they did
including
for me now?
including like the fucking the test, the road test thing they make you take. Not the driving test, but they make you take like when you transfer your license, it's like the that test that you have to take when you're getting your permit, where it's like
Yeah.
15 questions and you can get all of them wrong and still get your permit.
Yeah.
So you know what they did in Reno to improve the efficiency of the DMV there? They made a new DMV and then they closed the old one. So now there's one DMV for approximately like 1 million people.
You'd think they would have just
And
told people to go to Carson City.
I mean, that's basically what they're doing. Is if you live in South Reno, they're basically saying go to fucking Carson and go fuck yourself. Like they needed two. There was one in South Reno and there's one in North Reno, but they should have just kept the South Reno one open, but instead they closed it.
Well,
It was the worst decision. So yeah, so
But
in
they
all of
lowered your property taxes, right?
no,
Oh.
no, it's like so for Stead, just every like Spanish Springs, all of this municipality, like pretty much all of Washoe County is just one DMV.
Ouch.
And so you want to make an appointment, it's going to be 6 months out at least.
the issue is probably just budgetary, and there's no good solution because, and this happens at every single level of every like organized social thing, right? That the entry level, the barrier to entry is always set artificially low to attract people in. And then when they start complaining that they want more things now that they're there, they have to raise prices and taxes and all that stuff to start to actually deliver the things that they probably should have planned for at the beginning. But if they had this price tag at the beginning, people wouldn't want to move there.
You see, there's the one
Then everybody gets upset because they're like, well, why can't you just be more efficient? It's like, well, there's just no practical way in any world to give you what you want for the amount of money that we're charging. So if you actually want service, you're gonna have to pay for it. But then everybody's already, anchored to this lower rate and they don't want to go higher. And so it's just a losing situation. And again, the problem is not the government entities that are planning these things, who are usually your neighbors and other people in your town. It's the people who are just completely irrational and have unrealistic expectations about everything and don't put in any work or research or understand any of the processes at all. It's the same as the DMV is everywhere, right? I mean, any part of government, you have to convince the dumbest, most unprepared, loudest, most upset people on the planet, and that's why nobody wants to do it.
See, the thing that Nevada has that you're not considering is casinos. We could.
Yes, we understand that your state's run by a crime syndicate.
it's run by a crime syndicate, but we could also just increase the taxes on those casinos and be able to afford like 1,000 TMVs.
Yeah, why don't we
I know.
raise taxes on defense contractors while we're at it? Get the fuck out of here. Um, uh, um, what does this have to do with SPX? Everything.
This is entirely, we're describing the economy right now, my friend. All right, this is some high level shit. People
Yeah.
pay your
DMV
classic.
is fine outside of California. Okay, I will say that California DMV is by far the worst state in the world. You stand outside for 7 hours in 90-degree heat in a fucking parking lot just to go inside and then have them tell you we're not taking any more people today.
Oh, it's like day laborers hanging out at the Home Depot.
Yeah, that's what it feels like.
It literally is, dude. It's
I
like
was I was I was in a line at DMV in California one time, and this dude was making tacos in the fucking parking lot, and he had like a cooler full of Coronas, and he was just selling that shit. I don't think he had a license or anything, but people were buying it and just eating tacos and drinking beer in line.
dude, you have a line around the building like an hour before it opens.
Yeah, it's fucking ridiculous. It's really bad. And even if you make an appointment, sometimes they don't see you.
Whoever asked
Yeah.
the question, if you want to understand where the SPX is going in the future, you have to understand the mechanics of the Department of Motor Vehicles.
Yep.
There's just no shortcuts.
You're right. This is 100% true.
So back to last week's economic data. NFP was really interesting. Did that get revised up to 300,000 again? Sorry, 315,000 again?
Not yet. Probably in a couple of days, but it won't matter, right? That's what happened last time we got a low NFP print and the market went wild, right? Was it got revised the same fucking day, another 150,000 up, right? And everyone just ignored it. We're like, oh, we're already going up now. Why stop?
Yeah.
So yeah, I think even if it probably will get revised heavily, and it will probably also no one will care.
Yeah, no, it's well, I mean, it's just the whole thing is just a fucking theatrics, right? I mean, I don't. They wanted NFP to be low. NFP was low. They rocket the market. I mean, they're probably going to rocket the market no matter what, and then they can revise them up later.
It's all about selling the idea that the soft landing will happen without it ever happening, right? Like
well, it is happening.
Yeah, well,
currently happening.
it's not, right? You just project
what they're
that it's
saying.
happening. I know. But you just
Yeah.
project that it's happening and the market's forward looking. So it'll just be like, okay. Right?
Yeah.
If everyone
It's
expects the soft landing, then we can just keep projecting the soft landing forever despite it falling apart right in front of us.
Well, at some point it becomes undeniable. We just haven't reached that point yet. It's kind of like
I think we're already past the point where it's undeniable. I mean, the bond market's not buying into this rally hard, right? The dollar's still at 105.
But you get what I'm saying? Like,
yeah.
I just mean that, like, on the surface. What was that?
Since December, the bond market hasn't bought into any of the rally this year.
Yeah, I mean, they bought in a little bit on Friday.
Bonds went up like 25%.
Yeah, they bought the dip a little bit towards the end of the week, but yeah.
TLT Friday, December 29th was at $100.50, and TLT today is at 90, and it's like trying to push back up to 90. It's done nothing but go down all year.
I know. I'm just saying that there's a small cohort that is maintaining a bond portfolio, but I'm just saying that on the surface, right? Much like in 2007 and 2008, and the complete reticence by Moody's and Fitch and all those guys to downgrade, things like AAA MBS. It was what we're seeing right now is analysts, economists, everybody refuses to quote unquote downgrade, the soft landing essentially, and to put it in a very broad strokes of the brush. There's an outright refusal to even question the certainty of us currently being in the midst of the most perfect soft landing anybody has ever seen. It's more perfect than anything. It's so bigly the soft landing. I've never seen softer. It's the softest.
No offense to people who have long-term puts right now, but you'd have to be an idiot to not bet on the soft landing, because that's what the Fed wants, and that's what the Fed is signaling they'll be willing to do whatever it takes to try to achieve.
Will they succeed though?
That's what they've done since 2008, right? They've bailed out every bad decision anybody's ever made, and anybody who didn't take on leverage was the sucker. Right?
I'm long everything right now.
Yeah, like
Yeah.
if the Fed is going to signal that they're going to make all of these long-term mistakes, for short-term patchwork, you'd have to be an idiot not to.
Well, now hold on. The Fed didn't cut rates, right? Yeah.
No, but we know that the Fed. I mean, I think everybody is fully expecting that the second that anything looks like it's going to start to waver, the Fed's going to start buying assets and start cutting rates.
They're still doing quantitative tightening.
Currently, yes, although they did slow it.
Well, they haven't slowed it yet. It slows in June, around the time that the Treasury buyback goes into effect. But the rate at which they're slowing versus the rate at which the Treasury is buying back is not equivalent. They're just trying to provide liquidity to money market funds, right?
Yeah.
I mean, yeah. I don't really know how much that's going to soften like the inversion. It's not really going to soften the inversion at all.
Yeah, and they didn't slow the MBS at all.
No, they didn't.
My house, I just looked. I just got my tax estimate for the 2024 year for my property value, and so I moved in here December 2020, and they showed basically over that time frame, my house has appreciated over basically 4 years. My house is appreciated by 66%.
Not bad.
Over 4 years?
Just stupid.
Yeah.
And it's partially because the Fed bought all those MBS and continued to, right? Even well past the point where it needed to be done.
How does the Eurodollar system come into play here? Also, what is the Eurodollar? The Eurodollar broadly refers to any US dollar denominated deposits held in banks outside of the US. And then Eurodollar operations allow like mobility of capital across international borders by providing a mechanism for moving funds without the need to convert into another currency. So I mean, US rates have a big effect on Eurodollar market. If rates go down, banks might borrow dollars in the US and then lend them in Eurodollar markets, right? And then vice versa, if rates go up, they may borrow in Eurodollar markets and lend in the US. But it's largely like another like interest rate arbitrage system as far as like trading and stuff is concerned. It can drive choices in like Fed monetary policy because it operates outside of the control of like the Federal Reserve. So large flows can cause, well, they can influence like dollar liquidity, and that impacts monetary policy. I don't think liquidity is a problem we have with the dollar right now, but
no, not at all. We got a lot of dollars.
Yeah.
A lot of dollary dues.
Oh yeah. all the dollary dues, all the
Well,
simoleons.
Dollar dues already taken in Australia. I propose as our currency goes to zero, we start calling it the dollarino.
Ooh,
Mm.
dollarini, which would imply smaller.
Ooh,
Yeah,
dollarini. I like
yeah.
it. How many dollarinis does it take to buy a family-sized box of Lucky Charms?
I was thinking the Spanish way, dollarito.
Ooh.
Ooh, interesting.
Mm.
Only if the peso exceeds the dollar, though.
Okay. If the
Um,
peso exceeds the dollar, we're fucked.
peso's kicking ass, man.
Dude, Mexico's just kicking ass. Honestly, it's a hot economy in Mexico. I want to get into it somehow. Maybe just like invest in Fender or something because I know all their guitars are made in Mexico.
Mm.
Mexico adjacent companies.
That would be bad for Fender because they're like labor costs. Never mind.
Yeah, you're right. You're right. I should just I
Yeah,
don't
you
know.
just invest in U.S. companies that are moving all of their manufacturing out of China and into Mexico.
Yeah. You ever seen a
Mm.
1.9 delta priced in for a stock for a way out of the money option? Is the anticipating a huge move?
What?
What?
You can't have delta above one.
Yeah, delta. Delta caps
You're
out
looking
at point nine 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 nine
you're
nine
looking at
and
like
keeps
a
going.
brokerage, chances are look at the bid ask. If it's all messed up, then it's just a problem with the calculation.
I think he probably means like in delta and percent. So it would be 0.019 delta for a stock for way out of money. I mean, yeah, that sounds like people are just trading it and the bid asks are super wide. That'll cause delta to get all fucked up.
Or IV's high at spot.
Yeah, exactly. The same sort of effect, right? Where
Yeah.
Yeah,
with
somebody's playing some sort of ball play there, and the market maker's just making sure they're not giving something away for free.
yeah, one thing you can do to sort of see like how tasty it really is to look at the gamma. Because if your gamma is really high as well, then it's super risky, But if gamma is super low, then the market maker probably is pricing in just a higher probability of a large move. So something to look at with that. I mean, when you see a derivative that's super weird like that, it seems out of the ordinary. Dig into the second order and see what's going on with that, because that'll tell you whether or not it's a real thing or just a part of the chain being fucked up. So this week in economic data, what do we have? We have Kashkari talking. That's going to be kind of fun on Monday. So that's a thing.
You think he's gonna
Uh,
say, "Yeah, we're still not cutting rates this year," like a Chad, or do you think he's gonna be just a
Probably.
little bitch?
He's
What do
been
you
he's Bruce Cannon this whole time, dude. Ever
Yeah,
since he's
he
become a
has.
voting member.
I think he thinks he's like the automatic pick for the next Fed president. So he's trying to get out there and disagree with the general Fed consensus any opportunity he gets.
Well, you remember during the presser with JPAL, which I feel like the quote, "I don't see the stag or the inflation" is going to go down in history as
His Arthur
one of,
Burns moment.
and not only that, but I think that's really going to become an iconic phrase that people are going to talk about for a decade during stagflation.
Ooh, we have Sluice. We have Sluice on Monday too. That's a
Sluice
thing.
is big. Yeah, Sluice is big. And that's why I'm long upstart.
But speaking of Kashkari, and is he going to talk about no rate cuts and things? One of the questions that they asked JPAL um, was there? It wasn't like, were you thinking about, were you thinking about potentially raising rates this year? It was just simply, was there a discussion about raising rates in the FOMC meeting? And he completely dodged the question.
He's been dodging a lot of questions lately. And it's troubling, you know.
And then yeah, he came out with like this brand new inflation metric. Uh, I can't even remember what it was.
It's simple. It just eliminates more things.
Yeah, I mean, but essentially it was like, okay, we're all looking at super core,
Yeah,
or I guess it's that core services X housing.
yeah,
Is that
super core. Yeah,
and then
but super
now
core
that
is
that looks
red
bad,
hot.
yeah, now that
Yeah,
that looks bad, he just dropped this completely different thing, and it's just, but this goes back to like, this is just signaling that the Fed wants to cut. The Fed wants to support the market. They don't want to meet their mandate. They want to hold the market up. And so, it's like when you ask them, when are we going to get back to 2%? At what point do at what point have you effectively abandoned it, right? I mean, what's the average length of a chair on the FOMC?
12 years.
12 years. I mean,
Yeah.
we're
Well,
what?
it's two term.
We're a third of the way through it with inflation above target. So at what
Yeah.
point you just acknowledge that you've just given up, right? There has to be some time frame with which you return to goal. But if you refuse to make a time frame, then you've really just given up, right?
Well, and so the 2% target, I think that they've really dug their heels in on it. And to be honest, okay, the 2% target is arbitrary. It's not like and so hath King Arthur, when the sword was pulled from the stone, decreed that inflation shall remain at 2%, and that shall be the goal of our currency for all time to come. It's just a number, and we picked it. But now the Fed has really dug their heels in that we want to get back down to 2%. And instead of saying, let's set some goals and get to those goals and reassess, which would have allowed him to be a little more loose with monetary policy. He's like 2%, it's 2%. We're going to stick with 2%, not 2.5, not 1.5, 2%. And there's an argument to be made, Jay Fresh, that you want stable prices to both directions, right? And the risk, right, of trying to stick the inflation head in the toilet for too long is that everything just dies. And then you have the worst kind of unstable pricing, or well, the second worst kind of unstable pricing, which is to the downside, right? The worst
Here's
is
the
to the
problem.
upside.
I have a problem with that. I agree with you that the 2% is arbitrary. They basically made it up. They said deflation's bad because it can set off a cycle of saving and hoarding. So if you have inflation, it provides the lubricant to keep money moving. And they said 2% is pretty good number, right? It gives you a little bit of a buffer. Whatever. So I agree with you. There's nothing to stop us from say making it 3%. However, the problem I have with that argument is the how we got to this point. So we didn't nobody started talking about, hey, maybe we should make it 3% until federal spending got out of control and remained that way for a long time. And so basically now that we're having the conversation late after we've already, fucked up our finances and caused all of this inflation, now it is basically us saying that we are going to everybody, all of us as a society are going to kowtow to our elected representatives and allow them to continue to be reckless, and we're not going to do anything to rein them in. No other institution, even an independent one like the Fed, is going to stand up against Congress, spending too much money. And that's the problem I have with trying to raise it now. Do I think that in an otherwise functioning system where everybody is operating in good faith and using good fiscal restraint, do I think there'd be any problem necessarily with going from 2 to 3? Probably not. But right now, it's signaling to, the petulant man children in Congress that they can continue to be petulant, and I just think that that's a bad move.
Yeah, no, I don't disagree. And that's the hard part about this whole thing. It's a game of monetary chicken being played between fiscal and the Fed, right? Between the
And
federal and the Federal Reserve, and then we have, along with that, a game of economic chicken between the Federal Reserve, or just the USA, and the rest of the globe, right? Where we are, Girk explained it perfectly succinctly when he said we exported all our inflation, and now it's basically round robining its way back to us. So and it puts the Fed in a very tight spot, right? Because you want to raise rates, but if you have a non-cooperative government, and they're refusing to either cut back spending or increase revenue through taxes or some other means, then all you're really doing is you're just pushing the country further into debt, right? And all you're doing is encouraging the Treasury to basically lend out at super short-term rates as much as they possibly can, so they don't lock in these crazy high rates, right? It's just like people, right? No one's buying houses at these crazy high rates because they don't want to lock in a shitty rate for 30 years. They would much rather spend, fund money on their credit card and pay it off next month.
yeah,
Right.
I mean, all these things are connected, right? And we're moving so far out of equilibrium, trying, and all of it, all of the things and all of the different markets that are pushed out of equilibrium are to try and avoid the fact that the government's spending 7% of NGDP in deficits every year, right? And I mean, for example, I'll give you a couple of examples. I mean, Girk just talked about how the people who are moving to new jobs are getting huge wage increases, 7 to 8% wage increases, right? Consistent with 7% in GDP in deficit spending every year. The thing that's holding down wages right now is housing prices, right? And mortgage rates, right? So the housing prices can't go down because then all the old people who are voting for all these folks are going to get angry because they've all levered to the tits on their their home equity. So that can't go down. So people can't move and get those new jobs. If the Fed cuts rates, it's going to reignite inflation because it's going to reignite movement in the market, and it's going to reignite the the employment space, right? I mean, demand for workers is going to go up again as people are moving to higher wage jobs. So wages are going to rise again, right? Because the federal government is spending 7% of GDP, and they'll continue to do that as the rates go down. That will just encourage them to continue doing that because the Federal Reserve, as one of the independent pieces of this government who could push back on this reckless spending, is capitulating to it. Janet Yellen's doing the same thing, trying to issue in a way that allows them to continue spending the way that they're spending. And so you have this situation where they're spending too much money. People are trying to do just enough to make it look like it's not too out of control, but in doing that, they're allowing them to continue spending that money relatively painlessly, which is just going to cause more pain later once the doors finally close on all of these different strategies. And it's just going to make everything all that much worse, right? And so you have this situation where, I mean, the voting base basically at this point has been bought and paid for. Everybody's all in on government spending. It's all great. The Congress has found a pretty decent strategy of just call everything defense and then just fund it through the DoD, and then you can spend as much money as you want and nobody gets upset.
Wait,
Um,
AI cloud services are definitely a defense product.
Oh, you would be shocked to see how much money gets pumped into AI through the DoD.
I'm sure.
Massive amounts for a wide variety of reasons.
And yet we can't
But
charge Jensen with treason for taking government funds and then supplying our chips to China.
no.
Okay.
He's a great American.
Yeah.
He anyway. So okay, so the general population's not going to push back on spending. Everyone's found this happy medium where okay, we'll call everything defense and we'll just spend like crazy and everything's great. It's all responsible now. We all agree. The Federal Reserve's not going to push back, right? They're going to accommodate this spending, even though he goes to Congress twice a year or whatever and says you're spending too much money. This is a really bad thing. He accommodates it. Janet Yellen does the same thing, accommodates it as much as possible, and all it's really doing is allowing them to make the bomb bigger. But it is a bomb, and
Yeah.
everybody's saying, okay, you can just keep making the bomb bigger. We're not going to confront you about it. We just hope it doesn't blow up while we're still in charge.
I did
Hey,
notice. Oh, sorry. Go ahead.
I just want to say I made a chart, JFresh. Remember we were talking about the real rates? I made a chart and I found it interesting. Where if you assume real rates is indexed to GDP growth and not inflation, you see exactly what we're talking about. So
yeah.
Ooh, can we make up our own econometric models so we look right all the time?
I mean, we just think rationally and we come up with models that better reflect what's going on.
I was making I was being sarcastic.
We're going to be the Fed soon.
Wait a minute. Are you saying that you should make a model based on reality and not make a model and then create data to verify the veracity of the model?
Fuck off, JFresh. We make models that say the economy looks awesome, and then we get paid hundreds of thousands of dollars a year.
Don't forget speaking fees.
Talk about how important inflation expectations are.
Oh yes, they're so important, man. Yeah, that's like the crux of the economy is inflation expectations. Let me tell you.
I mean, they kind of are.
Well, sure. If they go well above inflation, then yeah, you should be fucking worried because that's a social reaction function, which is a huge deal. Yeah. But for the most part, it's pretty much just useless noise.
I mean, the 2-year is well above the Fed's inflation target for 2 years.
Yeah, I mean, and the 30-year is above the Fed's 30-year inflation expectations.
Yeah. Tips have been moving up too. The tips auctions have been really bad. And like that's where you're really seeing the bond market go now. This is bullshit. Right? Is the last two, like the 5 and 10-year tips auctions, yields like doubled.
That's not a good look.
No. I did notice something. I was just looking through the transcript of trying to find JFresh's new made-up metric for why the economy is fine because they can't use Supercore anymore, and it looks like it's like an in-housing services metric. So he's basically what he's saying is he's trying to quantify the difference between people who've already rented and are locked into leases, and their shitty effect on our currently lower rents. Which is absolute horseshit, right? The housing market is hot as fuck, and like rents broadly, especially in major cities, are not down at all.
Yeah. In major cities, yeah, they're up. There's also, I mean, that's the thing though. There's a wide variance, and so you can kind of craft with the statistics. Whenever you have a wide variance, you can kind of craft whatever narrative you want. I saw a headline. I saw both of these headlines. One, which is what you just said. Rents and property prices are up in every major metro area.
Mm-hmm.
I also saw a headline that said housing prices are down in 24 states, right? Which just says that there's at least 24 states without a major metro area.
Yeah, which is probably true. There's probably more than that. But like, yeah, I mean, and then, additionally, on top of that, you have You have the fact that those markets are more broadly influenced because everybody who's going to rent their house just goes on Zillow, right? And so it's constantly driving speculation higher in rent prices because they're like, well, if this guy's getting 2,500 a month for his house, I'm gonna ask for 26 and see if I get a bite, right? And then the next guy sees the guy listed at 26, he's like, I'm gonna try 26, 25 and see what happens, right? And then if people rent those, then that boosts the confidence of future rent landlords even more, and they're like, well, I'm gonna go for 2750 or 3,000, right? Because like clearly people are willing to pay 26. Look at all of these renting. So it's like eBay auctions, but for rental prices, right? And then yeah, he also referenced the Indeed jobs report as evidence of a weakening in the labor market. I don't know anybody who's ever gotten a fucking job on Indeed. um, but apparently
Yeah.
fewer people are getting jobs on Indeed. Nothing to do with the popularity of the platform. Of course not. It's obviously that they are having a substantial effect on weakening the labor markets. Lastly, in the transcript, he also, and this is maybe a little more interesting, I don't know if the market caught this, but so they said they were at the terminal rate in the last meeting when they released the summary of economic expectations, the SEP. And he pulled that back at this meeting, and he said, so I think it'll depend on the data. In terms of peak rate, I think it's really the same question. I think the data will have to answer our question for us. Whereas in the prior meeting, he said that the Fed felt confident that they had achieved their terminal rate.
Yeah.
So they pulled
Yeah.
back their terminal rate talk. They're acting slow, but I think it's pretty obvious that if inflation continues higher into the June meeting, we're gonna see probably at least talk around a rate hike, if not a rate hike.
Yeah, I mean, we've kind of laid, I think, a pretty good groundwork of thinking about all of the challenges that continue to occur that have unraveled now over years. But I truly believe that the Fed is not capable of creating a stable outcome in the economy. It's
Yeah,
too slow and too crude. The only thing they can do is either nothing or break something.
Poopy said rate cuts. That breaks something. If the Fed cuts rates, the top end of the yield curve is going to skyrocket. Yields on the like 10, 20, 30 year are going to go way up, and our debt's going to get downgraded. The first time inflation prints hotter after a rate cut, it'll cause a market crash. They can't risk it.
Yep.
They can't cut. They can't raise. They're fucked. They've
Yeah,
trapped
if they
themselves in their own.
cut, inflation goes out of control, and if they raise to actually tamp down inflation, they crash something because it's not up
Well,
to
they
the
break the
Fed.
banks. They break the banks if they raise rates.
Yeah, the outcome here is not up to the Fed. It's up to fiscal spending, which
Yeah.
they're spending 7% of NGDP in deficits every year, which is what our inflation plus productivity is going to probably be. And if it's not that, right, if our productivity starts to go down and they continue to spend at this rate,
Like it
inflation
did.
gets even worse.
Productivity went down, right?
Yeah.
Yeah. All right. Wages are up, productivity is
It's
down. This is
actually
the
like,
worst. This is actually the worst possible scenario of incoming
yeah,
data. Um,
yes.
but yet we're moving up, right? And
Huge
short
spending
vols
with no
piling in, and
productivity. Huge
yeah.
spending with no productivity is a bad thing.
Oh
Very
yeah,
bad.
yeah.
Much worse than huge spending with productivity plus some
I
inflation.
mean, that's what
Much
the GDP report basically directly told us that, right? We had huge government spending in quarter one. We had growth at 1.6%, but core PCE at like 3.4, right? So we all of that differential between our prior PCE reading and this one of like zero point 0.6, that's the growth that we paid for. It's just inflation now.
Yeah.
So
And
we're now deficit spending inflation up. The
yeah,
effect
and
on growth is no longer as pertinent
you
or
can
as
make it really
obvious.
simple. You can make it really simple. Um, the economy cannot. The economy will roughly grow with the. I mean, productivity is mostly peaked. I think in general, right? I mean, we're not going to see these huge gains in productivity. We're just kind of trading one form of productivity for a different form of productivity with the amount of people we have. So the only way that you're going to, I think, really uh, get ourselves out of this hole using productivity is to flood the country with immigrants. I mean, absolutely just flood because we're not making our own people anymore.
Yeah.
Um, so, and that's kind of what we're doing. I mean, that's kind of I think the way that the president is trying to thread this needle is just to let a bunch of people in, which is also pissing everybody off. But in lieu of that, so basically the we can expect our productive output to scale with the population growth, which usually is 2 or 3%. Um, and if we're spending 7% of GDP, then the rest is inflation. You don't have to look at CPI. You don't have to look at PCE. You look at those numbers, right? In GDP, population growth, and deficit spending.
Yep.
That's it, and you
Yeah.
can figure out what inflation is, and that's probably a better measurement of inflation than our actual measurements of inflation because there are much fewer assumptions that are baked into that, and the measurements are much more accurate.
I don't disagree.
Population notwithstanding, that one's hard to nail down, but not as hard as CPI baskets and all that shit. So inflation's 4 to 5%, growth is 2 to 3%. That's what we're gonna have until either productivity, until either spending goes down or something breaks. Right? I mean, it's pretty much that.
We just need to go back to calculating inflation off historic price tracking, CLI and WPI, because it's a far more direct form of estimating our inflation than what we're currently using and using CPI.
Yeah, I mean,
They don't want to do that because the numbers are frightening, right? Like cost of living indexes are just it's like a straight line up.
yeah, I mean, I think the primary goal of the federal government right now, I mean, it seems like one of the biggest efforts that they're all kind of working together on is to trick us into thinking that inflation isn't as bad as it is because then they can keep us happy, they can keep printing, right?
Yeah.
And we can continue to be confused as to why we feel poorer, and they just kind of continue this little grift for as long as they can. But I mean, I think it's clearly obvious. You look back 50 years, 40 years, uh, there's been a lot more inflation than people are letting on, right?
The
They just
media
call it hedonic adjustments, and it's like, oh, but your life is so much better. Yeah, I guess, right? I mean, we have better air conditioning. That's important. We
Our
have,
TVs are really good.
yeah, TVs are awesome and cheaper, which
yeah.
is great. Um,
Teslas are cheaper.
but food's more expensive, housing's more expensive, right?
Yeah, the
Yeah.
stuff you need to
All is
actually like
more
keep your heart
expensive.
beating is way more
Cost,
expensive.
the cost to function in society is more expensive. I mean,
Like
phone
healthcare,
service
yeah.
dramatically more expensive. Healthcare is more expensive.
My phone bill hasn't changed in like 5 years. Is your phone bill
Technology
going
is
up?
inflationary.
Well,
Technology is an
the phone
inflationary
bill
commodity.
changes if you. So eventually they're going to offer something so big you can't refuse, right? Because they have to grandfather you into your old plan. But anytime you go and like you, they'll offer something that gets you onto a newer plan eventually, unless you
They
just
keep trying to get me to get rid like willingly get rid of my unlimited data. Not happening.
Yeah, they want you to go to like a quote unquote unlimited data plan that throttles after a certain point and it costs more. And yeah, they're trying to raise prices on you. They just haven't suckered you into it yet.
Mm.
Anyway,
Oh, hey, Wiggly got a job on Indeed working for Rite Aid, and then his Rite Aid closed. I'm sorry to hear that, man.
that sucks.
Media just now started suggesting that rate decreases would be bearish for equities. Yeah, no shit. Um, why would anybody want equities if bonds are skyrocketing?
Yeah. No, even just even like, so like, we priced in a bunch of rate cuts. We saw what happened to the fucking bond market. I mean, but I think that everybody knows that was bullshit. It was way too early. It was premature, and that's why we didn't see a drop in equities. But the moment the Fed actually cuts rates, whoo, it's going to be crazy.
Yeah.
Like we got spreads that are going to just tank, and then we have equities that are probably going to tank as people run into bonds. We have a bunch of fucking basis traders that are short bonds right now that are going to get squozed. It's going to be fun.
Yep. Biden wailed in with his xenophobia comment. What did Biden say was xenophobic?
Oh, he said Japan was xenophobic.
Well, everybody knows that. That's not like
Yeah, I
that's
mean,
not a hot take.
what he said was that some of our recent success has been because of our dramatic levels of immigration,
He
which
needs to
Japan.
shut his fucking mouth. All the white neckbeards in the U.S. are going to leave and move to Japan if they offer any kind of incentive at
Well,
all.
no. So yeah, what Biden really said was, accept your gaijin overlords. Okay, Japan, we are here to stay. We are going to take your land. That's what he said.
I'm going to buy a fucking house in Japan. Have you seen how much cheap they are?
Well,
You can
yeah,
get like
dude. I
a
mean,
fucking like 3-story apartment in Tokyo for like 600 grand.
do it, dude. Buy it. I'll stay in it. I'll keep the lights on for you. I'll
Their
vacuum.
housing market's like obliterated. It's so cheap, and the fucking conversion rate, it's so cheap.
Yeah, no, it's ridiculous,
And their food's better.
their food's better. Well, plus, yeah, their food's everything's better there. Really.
I don't know about healthcare, and you definitely don't want to go to prison. But
Yeah.
they have better public transportation. And if you don't pay your credit cards, some guy will follow you around everywhere you go and tell everyone that you don't pay your credit card bill.
Ah, shit.
That's what like debt collectors do there.
They just
They
ruin your
just
reputation.
they just shame you publicly.
Yeah, the story that is unfolding is really, really interesting, is it not? I mean, like just everything into context. When you really boil it all down, this is such a unique point in time. I am nothing but excited to see how this all unfolds over the next 5 years, because something tells me it's not going to go quite as expected.
Hmm.
Yeah, it's gonna be fun. It's gonna be interesting.
Yeah, I don't know about fun, but it will certainly be interesting.
Yeah.
All right, let's
I
talk
don't.
about the market. Like how
What
this
do you
actually pertains to making money.
What do you want to know?
Well, you won this week, but only because you're an asshole. Um,
Yeah,
Dork did not win.
I was kind of
Damn it.
off on that. I thought it'd go up in the middle and down at the end, but it kind of just went flattish in the beginning and then went up at the end.
I think we need a new metric for determining the winner, but I don't know what it could be.
Some squared errors across every day.
Mm.
Yeah, Gert, go ahead and put our prices at the end of every day into a spreadsheet, and then yeah, give us our R squared. See who wins.
I don't want to do that. You can do. Do you want to do that?
No, I don't want to do that. No.
Oh,
What?
okay. Well, then why would you ask me to do? You think I'm going to use a spreadsheet?
You're the one who proposed a new metric. I gave you the best one.
But I don't like that. Wait, maybe we could get Carl to do it.
Yeah, there we go. Yeah.
Yeah.
Who else likes spreadsheets? Atomic likes spreadsheets. He won't do it
Atomic,
though.
he doesn't like spreadsheets as much as he just like data and organized into grids.
He likes SQL.
Yeah.
Anti-spreadsheet.
Yeah, let's get Carl to do it. Carl needs something to do.
All right. So what are we looking at this week on an economic front? We got basically nothing, right? We got some 3-year and 7-year auctions, right? We got a 10-year, 310. We got Sluice on Monday. That's a big deal.
30-year on Thursday.
Okay, so we got 310 and 30.
Yeah.
All right.
And then we have consumer sentiment on Friday. And a bunch of Fed speeches throughout the week, too.
Bank of England's going to make a rate decision Thursday morning. I don't think they're going to cut yet. They should.
Nah.
But probably not. Then they have Great Britain GDP Friday morning. All of this looks boring. Michigan consumer on Friday. Wait, where do you see consumer sentiment?
That's on Friday, yeah.
Oh, Michigan consumer sentiment, you mean?
Yeah, sorry.
Oh, okay. Yeah, is that the preliminary?
Yeah.
Yeah, it is. Okay, so that one's kind of important. Although that's been bad the last 5 weeks and no one's cared.
Yeah, well, I mean, because our current thesis revolves around not caring about the consumer. So
We got consumer credit change for March on Tuesday.
Okay.
We got some more EU. It looks just like a bunch of like EU shit, and like EU economies are probably just gonna be shitting the bed still. Balance of trade for China is expected to grow pretty substantially. If that misses, it'll be really bad. Because if yuan drops, the dollar is gonna rocket again.
I think the sluice is going to be probably the biggest driver of, net positioning changes over time.
Yeah, sluice will be important.
I can't understate how important it is to see whether banks are tightening or loosening their credit standards for their customers. It's a big deal, because they've been slowly letting their foot off the brakes, at least as far as I can tell. And what that really means is they're just not tightening their standards more, right? So, and in the sluice report, you also get you get to put your finger on the pulse for various durable goods markets, right? Between housing and automotive and all these things, delinquency rates, all that stuff is packed into the sluice. So it's a really, really good economic pulse check. So I'm going to dig into it as soon as it comes out. Probably not as soon as it comes out, but at some point that day, I'm going to dig into it and see what's going on. And I encourage everyone else to do the same.
Yeah, it's smart to read it. It's also big for like Upstart and banks and financial services. So there's a lot of like real world alpha that can come out of reading through this sluice report.
Yeah, 100%. So, anyways, that's my take on all the data next week.
SLOOS.
Yeah.
No, not that kind of sluice. Not sluice juice.
You're talking about the loan officer survey, right?
Yeah.
Yeah. Yeah, that's a big deal. You get a lot of charts with it too, it's fun to look at the charts, but also you get a lot of words. The words are also really good to dig into and see kind of the opinions of those guys, because of the impacts of the sluice. The impacts of these decisions of these lending members of the market, they're far-reaching.
Are there any earnings of note? for this week?
Aren't there some banks? Or are those later?
Big earnings this week. There should be a couple.
You got Beyond earnings on Wednesday.
Any AI plays? I don't know what microchip does, but
Well, Beyond is an AI play, and they're on Wednesday.
Let's see. We have Upstart, Beyond, a lot of meme stocks. Airbnb's got earnings. ARM.
Hawaiian Electric. If anyone
Uber,
still has
Uber,
gold in there.
Shopify, Affirm, Crocs, Disney.
Disney will be interesting.
Roblox is a good metaverse play 3 years ago, because apparently shitty games online for kids is the metaverse.
Yep.
That is the metaverse.
Enbridge on Friday.
Yeah.
Yeah, not too much this week. Nothing crazy.
Yeah, a lot of little nibbles here and there potentially looking at like consumer health with like Airbnb.
Yeah.
And maybe Uber and Lyft, but probably Airbnb would probably be a big one for that one. And then
Win maybe. Win might be a big one for consumer discretionary spending. So would Win and Disney could both be pretty big for discretionary spending, especially as we move. Well, except not a lot of people are going on vacation just yet. I mean, those will both pick up more, but if more than average are going on vacation during this period of time, and there's a lot of like tourist spending, that could be good. For like, we're all for consumer sentiment metrics at least.
Spirit
Unity.
might get on that too. That's Monday before open.
Which is
Spirit Airlines.
Oh, Spirit, yeah. Berkshire's Monday. That's big.
Aren't they in a bunch of cash? Oh, that was another big thing this weekend. It came out that they sold a bunch of Apple.
Yeah, in Q1 they reduced their stake by like I think it was 18%.
Yeah, it wasn't nothing. So I think that'll be big. I think that'll tamp down Meme 7 a little bit.
Yeah.
Maybe a lot of bit. I don't know. We'll have to wait and see. But there certainly will be a lot of people that are like, "Huh, maybe I shouldn't hold so much Apple right now."
You know, Jay Fresh, the thing is,
Apple's responsible for a lot of the returns on the index right now, like a big chunk.
Yeah, they've been going crazy. Apple's been super duper volatile.
Actually, yeah, I should probably run really quick. It's something like 2 or 3%, maybe closer to 3-ish plus of returns on the SPX over the last 2.5 years have been buybacks. Which is
buyback. You know, I love it when the companies whose stocks I'm looking at are the ones buying their own dip. That is so uniquely American.
I drew my line.
You drew your line already?
I drew my line already.
You son of a bitch. You stole my line.
Get fucked, nerd.
God
what
damn
is
it?
I'm looking at the stream. What is it?
It's going to gamma neutral.
Yeah.
Well, what is gamma neutral right now?
Yeah.
5,200-ish.
Asshole.
We're all gonna be wrong. We're all gonna vote for the upside, and we're all gonna be wrong. Berkshire will miss. They'll say something about reducing more holdings in big tech, and then big tech will pull back and will fall below 5,100 and just fall right back down to 5,000 again.
Well, thanks for drawing my line for me, Girk.
That's the Bear Girk line.
God damn it, you stole it too. Fuck.
I didn't. No, I didn't steal it. There's no bear Gurk this week.
You dick.
But that's what
Ugh.
futures looks like it could do. It looks like we could test like 5,200 on ES in the early part of the week, and then fall back to the trend around like 51.15.
You were like the Carlos Mencia of market price predictions.
I want a straight line from close on Friday.
Sorry,
You
what
want
were
a
you saying,
straight
Jake?
line from close on Friday to where?
51.50.
You bitch. That's fuck you. See, this is the problem. Instead of giving like real predictions, we're just trying to go like lower or higher than the initial prediction.
Okay, my turn.
Yep.
So
I pioneered the straight line that now everybody's doing because nobody wants to put in the work.
all right, so fine. I'll do one. Okay. So from close on Friday to, but I got to be bearish. Okay, so to GN by Wednesday. So 51.95 by Wednesday, I guess. That's pretty good. Maybe 50. I'll say 5,200. Make it an even number. We're gonna test 5,200 by end of day Wednesday, and then by close on Friday we will be at 5,000.
That's very similar to my prediction last week, which was wrong, but I somehow won.
You see, I'm a big fan of the gambler's fallacy. All right.
Oh, if you flip heads, you're more likely to flip tails next.
Well, no, it's just that if I keep predicting something from last week, eventually I'll be right.
Right. That's another way to say what I just said. Yeah.
Yeah, exactly.
Who was the person that was in here that was like adamant? People were arguing with him for hours, adamant that if you say you flip a coin 3 times and it's heads every time, you're more likely to get tails the 4th time.
Oh God, yeah, I remember that. I don't remember who it was, or I'd publicly shame them right now. But that was hysterical.
That was a lot of fun.
Yeah.
It went on for a lot longer than I thought it would.
It went on for like 4 hours. It was like 4 hours of arguing probabilities. Oh, it was Bob. Thank you so much, Jen. It was Bob, decrier. It was Bob, decrier of Dork's pork chops.
Of course, yeah. Okay, so now his opinion on pork chops makes sense. He's a fucking moron. Okay, got it.
Everybody shame Bob today. Find time in your day to shame Bob.
For this thing we remembered.
Understand the concept of a coin flip.
That's me fear on the Discord, right?
Yeah. It's me fear. Yeah.
The guy with the Alex Jones PFP. Yeah, go shame him.
Just 2 difference in close and open price. Daily, person with the lowest score wins. Ooh. I like this because I would have won last week. Yeah. Okay. All right.
Just tell Carl what you want, and then we're good.
Interesting. But what if JFresh just has a flat line? It's so much harder to calculate.
So I hope Carl can handle a linear interpolation.
That's asking for a lot.
Is it?
I don't know. No. Maybe. Probably not.
That's asking for very little, in my opinion.
It's Carl.
Yeah, Carl read I know my 1, 2, 3s. I think he knows what a linear interpolation is now.
He have like an actuarial something or other.
Yeah, he has some sort of degree.
He can handle a linear interpolation.
He knows he has a degree in math things.
I want to question what math things his degree is in.
It's in maths. It's literally in math things.
Yeah,
He's
math things.
in math things. It's like having a degree in hand stuff.
I mean, yeah, it's like a Dan. It's a Dan degree.
It's a Dan
Okay.
degree.
All right, so those are our predictions for this week, all of which will change by tonight.
Yep.
Yeah, looks good. Well, thanks for shooting the shit. I guess let's see how the market digests lower labor somehow being bullish.
It's
Yeah, a
gonna be
lot of
fantastic.
digestion is going to happen, I think.
Yeah.
We'll see how.
I
You
mean,
guys-
I just think it's going up because short vol's piling in like crazy, right? What
Yeah, we
what
didn't
what
even-
was surprising is Friday they weren't able to squeeze out the short calls. They just got wrecked. They kept
Yeah,
trying and trying and trying, and the short calls they just kept selling more.
Well, and I mean, we've been saying for a while now, there just simply aren't as many now. Like the short calls are nowhere near as levered as they were on the way up the first time.
Yeah, there's
And
not a
so
lot to squeeze. You're right.
we didn't really talk about options. I'll put all that stuff up on Twitter. I still haven't written it up yet, but I'll put all that info up online and then in a couple hours, hopefully. But yeah, there's kind of the same old story, like short vol on the put side's trying to lever in and hold this thing up, but there's just not anything in the call side to really squeeze, so it's just kind of flopping around.
Yeah.
But yeah, they're still pretty levered. They're still in the hole too, so they're either gonna fight or get effed.
Can you get your
I
thoughts
mean,
on
really,
hood
the
earnings?
question mark is whether or not they're going to buy calls, right? It's really like this market needs bought calls to continue to go up, and no one wants a depreciating asset.
Well, unless it's a
Yeah, there's a little bit of reticence in buying out of the money calls still. Which, yeah, that makes it tough, especially with our proximity to like gamma neutral and delta neutral. Like, if not enough calls are bought, all they do is pull DN and GN a little bit closer to spot, which means if we slip, it's way more risky. So definitely could get some chop. If we slip below DN GN, we could definitely see a big drop because there's no fucking support to the downside at all. It's just nothing but sold puts all the way down to like 4,800.
Yeah.
Yeah, it's
And
kind of
like
an
the
anti
leverage
support.
is still super high, so it could still be fun. They've levered up. They're at the leverage they were at before when we were at the peak and everything was running smoothly. But they're like 300 to 500 billion dollars in the hole.
Yep.
So they've levered into this. I hope they get screwed, but there's still a possibility that they pop this baby up and keep it going.
Yeah, that's what I'm thinking. Is like,
But how
just a couple
long, right?
days
Like
this
they
month.
could only really keep it going till like CPI, PPI. Unless those are soft this month, but I don't think so. Gas was still going up last month.
Yeah, we'll see. I mean,
And then in June, the June CPI report gets that additive healthcare costs.
I mean, if I haven't made myself clear today, as long as the government's spending 7% of NGDP in deficits, we'll see.
So isn't the easy trade bull put spreads and long calls? Probably bull put spreads and long debit spreads, right? The debit spreads are a little advantageous here because the out of the money positioning is so weak. You don't want the cost to carry destroying your like just straight long call position. So it's nice to just pick like an upside target, sell a call there, right? Like you sell like this is just an example, but sell like the 5200 call, right? Buy the like 5150 call, right? That's your upside covered, and then you could sell like the 5100 5075 put to the downside, right? And that's your flat or up position. And that would probably like credit. I don't know. I'd have to look, but credit to debit would probably be fairly flat on that. And then if it does go up moderately, you can just close everything and you get like a slightly better profitability on it. The only shitty part
Yeah.
is if it drops really hard, you get fucked, but yeah.
You don't
You
get
can
fucked as bad as you do it just straight
well,
long calls.
you can always just close the 50-75 short put, right? And then like cuz if it drops, it's going to drop hard, right? So you can close the 50-75 put on like a breach of 50-80 and then just ride the 5100 all the way down.
Yeah, I mean, you can even
Which
close the
would
5150 call too.
yeah, which would more than pay for the position.
Yeah, or you'd have to sell the 5175 call or like the 5125 call, something like that,
Maybe.
and close your 5200 sold call. Just roll it around.
Oh yeah, just well you would roll this down to 5100, right?
Yeah, exactly.
You roll that down to 5100 and then you close this and then you capture the downside.
Yeah. No, when you're like and I had a discussion with Nuke on this a bit, but theta on SPX is best served as a spread. You know,
Yeah.
it's too painful. It's because it's the cost to carry is ridiculously high for anything under like 6 months, and you don't want to get eaten by theta. People talking about going long options to hedge other long options. I just call it hedging your theta with shittier theta. Um, you don't, you want to not be net depreciating if possible, right, or as little as possible, while still covering a max profit for the expected price action you see. It's a
Well, we're very grindy to the upside, right? And so debit spreads are benefit off debit and credit spreads benefit off that the most.
Yeah, no, VIX dropped to like 13 and a half.
Yeah.
So, I mean, at this point, right, I don't know about short vol, but protecting your theta is definitely important with VIX as low as it is.
Yeah. A realized vol is still pretty high. I think it's higher than VIX right now. Like 30-day RV is above VIX. So I assume that there's gonna if this bull run is to persist, that we're gonna need to see uh like realized vol come down hard, which means a lot of flat days.
Yeah, a lot of 1 bip up and 1 bip down days. Love it. Love those so much. The
Yeah.
best.
Well, just like I mean, days where we trade up in the intraday and then close low, like close it open, like those kind of fucking that kind of bullshit.
Yep.
Or like our 3-day variance is just zero.
Right.
Like all the gains from Monday and Tuesday are deleted on Wednesday, and then Thursday, Friday, we can go up, and then those are deleted Monday, Tuesday next week.
Sounds like fun. I
Yeah,
can't wait.
right. Me too.
All
But like, if
right.
you're an addict and need to feel things, same thing. New announcement by the Fed that super duper core CPI is just based on Tesla and Fisker Ocean pricing. That sounds reasonable. It keeps dropping. So, all right, guys, thanks for tuning in. I appreciate it, and thanks for joining me for this lovely discussion that we've had today.
Thanks for having us on. I'm glad it didn't go for 4 hours.
Yeah, we got it done like right around 3 o'clock this time, and we still managed to sneak in a pretty long conversation about DMV and
Yeah, I was going to say thanks for allowing me to raise DMV awareness for all. And
yeah,
the
I think it's important.
workers are underpaid and underappreciated and blamed for, frankly, a lot of things that they just aren't responsible for. And so I just think it's important to raise awareness.
Instantly just got 30 more DMV employee viewers.
Woo!
Yeah, winning. All right, thanks guys. I'll see you later.
Have a good one, bud. Later, guys.
For everyone else, thank you so much for tuning in. I will have Pickles Picks out tonight. Probably not that late. I'm probably going to get started on them a little earlier. I don't expect any big surprises out of the futures market. And hit me up on Discord if you had any questions that I was unable to answer on the stream. And let me get to this one before I go. Gert, can you give your thoughts on hood earnings? Trade volumes are up quite a bit. Retail trade volumes are up quite a lot as well over the prior quarter. So I think hood's probably a beneficiary of that. They have been spending a lot of money rolling out new programs. That could hurt their bottom line a little bit. So I would say neutral to slightly bullish on the outcome of their earnings. And then yeah, so I'll see you guys all bright and early tomorrow. Enjoy the rest of your weekend. Later.